We are live. Let everybody come in.
Somebody TV is on. Oh Lord, who TV on?
I see Ben got in on us. Brother Jackson, what's going on, man? Let everybody trickle in, and we will start at 7:10. Good evening, Brother Jackson. Good evening.
Good evening.
Hello, brother.
Waiting on my 401 tip. Is
You
that
got it coming.
okay?
401 coming.
Cash out and send to me. That's the tip of the day.
Let me come on in. Come on in, and we will start. What's up, Hut? P. Hut.
So,
a penalty for you, but not me. You know.
That's true too.
I can send you some money to help cover that penalty. Early withdrawal.
Come on in the room. We're gonna let everybody come on in. We are starting this at 7:10. Hello to everybody out there. If you're joining us, just comment and say what's up. Brother Edward, what's going on, man?
Tell me how to get this money right.
We about to break it down.
What is it saying? Like I'm on newscast.
Hopefully everybody has already made it home safely. That's joining us. Yes, sir, Brother Johnson. Yes, sir. Just go on to the comment so we can say what's up.
All right, let's go ahead and get this episode started. First of all, welcome to another episode of PNL Ronu Lambda TV, where I am one of your co-hosts, Denard Andrews, the president of the Ronu Lambda chapter, along with my co-host Walter.
I am Brother Walter Herron, the vice president of the Ronu Lambda chapter of Alpha Fraternity Incorporated. Tonight, we are going to jump into the topic of money. The three brothers joining us are going to help us out on this topic. We know everybody is dealing still with the pandemic, and money is always essential and a big priority. But even more now that we're going through these changes and different things are happening. So without further ado, let me introduce our guests. We'll start at my top right, Brother Winters.
Good evening. How's everybody doing? I'm Matthew Winters, financial advisor and planner.
Real quick. All right.
We'll move on to bottom right, Brother Matt Leon.
Good evening, everyone. My name is Matt Leon. I am a corporate audit and credit review senior professional for Bank of America.
Welcome, and thank you for joining us. And last but not least, we will hear from Brother Butler.
Good evening, everyone. My name is Vincent Butler Jr., and I'm a CPA and owner of Butler and Gatz CPAs over in Garland, Texas.
Welcome. Thank you guys for joining us tonight, and thank you for all of our guests for tuning in.
All right. So as Walter said, we're living in a pandemic right now, and that coronavirus has upset a lot of people's financial lives. We're in turmoil right now from a financial perspective. So we thought it'd be advantageous to kind of bring in some subject matter experts who are our brothers at Alpha and just kind of talk through some of the topics, just kind of help educate us and make sure we're aware of, things that can help us during this time. So we're going to step through a number of different topics. So if you do have questions out there that are watching, please feel free to drop them in the chat and we'll make sure that we will address those. So the first one, we're going to start with savings. All right, let's talk savings. So everybody doing savings? Everybody saving their 10, 20% from their check?
I'm sure we're not saving as much as we should be, but that's why we have these subject matter experts on with us to let us know exactly what we should be doing.
I mean, from my perspective, I think everybody's saving situation is different. I think it depends on the way you live your lifestyle, right? What your debt to income ratio is in that regard. And also what you are using your money for in terms of savings. Like, is it long-term savings or short-term savings? So for somebody like myself, my income varies. I always manage myself on a bottom line and I utilize ratios. So what that means is that whenever I get paid, 10% I tithe with, 10% goes to a savings account. I have 15%, that's my fund money. And then the other 65% I use for living expenses, paying the mortgage, household bills, daycare for my kids, things like that.
Okay. So those sound like good practices. Tell us how you break that down. Like, do you have a spreadsheet? How do you look at that every month?
Yeah, so I'm a huge Excel spreadsheet guy. I love spreadsheets. So I manage the house just like a business. So I incorporate everything to a spreadsheet with the bottom line being the income, and then all the expenses are listed down and everything just calculates itself. So I can just plug in a new number, and some numbers vary, right? Your utilities are going to vary, your water, trash bill are going to vary, things like that. But most of the other things are going to be constant, right? So, but you put those new numbers in and everything calculates like that. And it just tells me how much money I'm going to have.
So how often do you move money around that, probably shouldn't be in one of those buckets and put it into your fund money?
Yeah, so I'm real tight with it, man. So like I keep everything as it should be. Everything flows how it should flow. So my 10% goes into a savings account. It's a savings account that's used for emergencies. However, I haven't really had an emergency reason to use it, so it stays there. My fund money, basically what I do with my fund money is I'll take that out and I'll put it into a separate account that goes to a debit card. And so that debit card is what I use.
Okay.
I think it helps too when you can do things such as like, for what I have going into my savings account, I put into account that I don't really look at a lot because I do like to kind of move that money around, and sometimes you can develop that habit of taking it out and having fun with the money. So I put it into something that like I don't really see. I know that it goes there, but I don't really see that. I see a comment coming in saying about fund money, but yeah, I put it into an account where I don't really look at that account much as I would any other account. You look at it enough to kind of see how it's growing and what's in there every once in a while. But I don't see that as it comes out of my check. I don't see it. I check it periodically because you get the habit of moving things around. So you can do that. And I think also you hear a rule of thumb of that you try to want to have a savings account where you can live off of your expenses for up to 6 months if something were to happen. For some people, it just depends on your situation. I think for some people that could be a little bit of aggressive depending on what you have, how your finances are. But I think that's a good rule of thumb to have just, for a rainy day because, we're living in times where this is a rainy day. COVID is a rainy day. So having that money set aside at least up to 6, you would definitely want to at least be able to have 3 months, at least 3 months, minimum.
And
I know
piggyback on the tail of both of the Macs, it's really about you just got to start somewhere. I'm a tax accountant and I've never been the best at saving. I look at things, I'm a cost benefit type person. Even with my firm, is this new piece of equipment, laptop, whatever it may be, is that going to provide a greater ROI than the other purpose that I have with that money, like opportunity cost. But like my pastor said with tithing, we say 10%. For some people, 10% is daunting, especially if you're 30 and under. So, picking somewhere and starting, and like Matthew Winter said, he's a ratio guy. I like percentages as well because it gives you a threshold. But, say, all right, I'm going to do 2%. That may fluctuate up and down, but start somewhere and then get into the habit of it. And I'm just now getting to a place where I'm more and more comfortable saving.
I think that's a good point because what I've heard from people around me, we've always been taught to, we should have that 6 months, 9 months worth of cushion. And I think this pandemic caught a lot of people without that. So starting small, I think that's a good step to get people on the right track to start saving. I think with any other practice, you start small and you start building your way back up to something like a larger goal.
Exactly.
So with that being said, both Winters and Leon, between financial advising and the bank, what are some good savings accounts to open? I know everyone you have different percentages that you accrue interest or whatever on it. So what are some good different accounts?
I mean, I don't want to tread on Bank of America. Goldman Sachs has Marcus, which is at about 4.2 right now? 4.2%, I think. Right now is what you get back in interest on an annual basis. I mean, you always want to look for, typically most savings accounts, you'll be lucky to get 1%, right? But there are some other institutions out there that will offer more like markets, which is going to give you like around 4%.
Yeah.
And regarding that too, you hear a lot about these remote or online banks that don't have the brick and mortar on the corner. So usually with those, you're able to get a little bit more in return when it comes to your APR. But from what I know, like I have mine with Ally. And I feel like they've been emailing me almost once and twice a month saying that my interest rate is keep getting reduced, getting lower than what I originally signed up for some years ago. So even with that, it's probably still better than some of your commercial banks that you get.
A lot of times the credit unions have a little bit better rates and stuff too. If you could get a credit union, I have a Navy Federal credit union savings account, and it's pretty good too. So a lot of times that works in your favor, and also works in your favor too. The credit unions are a little bit better about borrowing. I know we'll probably talk about that later about borrowing. When you get ready to borrow money, they're a little bit more lenient and better about giving you good rates and more for your return when you go through a credit union.
Yeah. One of the things I like about smaller regional banks, and of course I got an account with Chase. They're just as big as Bank of America. So I have no knocks against big banks, other than during the times of crisis like the pandemic, they have so much volume. I mean, there's so many. They have so many clients, so there are so many other people to serve. It was almost impossible in the initial phases of the rollouts, the PPP loan in particular. you had to get in there quick. Whereas like a Frost Bank, they were processing 100% of their applications. So I'm actually in the process of opening an account with Resource One Credit Union, but I also have a big bank. I think it's good to have a relationship at both.
That's good stuff. Yeah, I've always been a huge proponent of having a credit union and having a nationwide bank on your side, especially when you travel around the country. That nationwide bank, you can go to an ATM pretty much anywhere for that. But then also, like Matt Leon said, from a credit union perspective, they provide more in terms of borrowing, especially for like a home or a car.
Nice. Speaking of homes, we're gonna that'll segue us into our next topic. Let's talk a little about credit utilization and exactly what we should be looking at when it comes to credit utilization.
Well, I think if you've done any kind of research on credit utilization, you definitely want to be at a place of where you're keeping that credit utilization across all your credit cards. You want to keep that credit utilization under 30%. A good rule of thumb is to try to keep it under 10%. And you want, a lot of people have this notion that you need to have that by the due date. You actually want to make sure you have that down by your statement date. So by your statement date, you want to make sure that credit utilization is down by. You don't want it to be over 30% by the statement date. So try to keep it under 10%. That's a good rule of thumb. I mean, 30% is good. 10% is probably aggressive. That means you're probably thinking 10%. I can't even use my card, but it helps your scores and things a little bit more when you keep it under 10%. You'll get a little bit more for your score if you keep it under 10% versus the 30%. The 30% isn't bad, but if you keep it under 10, it doesn't affect your score as much. So,
Winters, I think you were about to say something.
I was going to say you may want to explain the difference between the statement date and the actual due date.
Right. Okay. So the due date. Let me make sure I have this right. The due date is going to be is what it is. It's the date that your payment is due. The statement date is the date that they actually going to report to the credit bureau. Right. So you want to make sure that before they report that to the credit bureau, you want to have your balances down to reflect that it's under 30% utilization before that date.
Okay, we got a good question coming in. Brother Edward says, could you provide some tips on paying down credit card debt?
That's a good one.
Yeah. I mean, honestly, I think it's easier to pay down credit card debt the less of a balance you have, obviously, right? I would say you just have to be strategic with it in the form of, just like how Vince was talking about savings, you start somewhere, whether it's paying the minimum over the minimum or whatever you can do it. Because obviously, there's some people who use credit cards for living expenses knowing that they have the money to directly back it up. There's other people who use credit cards because they have to use it for an emergency basis for something, car trouble, whatever, because they don't necessarily have the funds available to pay for it. So in that regard, I think it's important that you're at least paying the minimum, if not more, so it doesn't put you out in other ways of your spending plan or budget or whatever you want to call it for that month.
Yeah. I haven't had to do this, but I've heard people that it works for some people. Being able to utilize if you have yourself in a situation where you have a lot of credit card debt, getting a card with I guess if you get approved for a card with a higher balance, they'll allow you to transfer money into that balance. So some people I've heard have used balance transfers to kind of transfer that remaining balance into another credit card that might have a better interest rate. So that way you're not paying as much, or you're not calculating or assuming a lot of more interest while you're doing that. So that might be a good way to kind of pay down some of your credit card debt, is if you can utilize some balance transfers and kind of pay it down that way. I think that'll help out as well.
Direct ACH payments too. Scheduled ACH payments where it comes directly out of your account.
Yeah.
And what I've read too is from a I hear people call like a debt snowball type method where you pay on your accounts that have the highest interest rate, right? So you want to put as much money toward those above the payment minimum, of course, if you can, and you pay down the ones with the highest interest because that's the one that's costing you the most money, in the long term. And then once you pay those down, then you can send those same available funds to start getting the next one, and then the next one, and then the next one.
So everybody wants to know about credit, right? So if I'm a person that I'm stuck in a situation where I'm working on my credit, right? I have bad credit right now, and I'm trying to work on that. What do I need to do?
Say that again, Walt.
If I'm a person that I'm trying to work on my credit, say in the near future, or even in a little ways down the road, I want to get a house, or I'm looking to buy a new car, and I'm working on my credit. What do I need to do to see my credit score increase?
I would think the first thing would be to get a card, apply for a card, whatever kind of credit line you get, and then utilize that responsibly. I would say another thing is if his credit history is an issue, then find a family member or somebody who has a great credit history with a high credit limit, and become an authorized user on that card, so it'll show on your credit report. I would also say you can purchase.
Go back to that one. Say that again.
Okay, so for instance, let's say you're buying a house, right? One of the things they're going to look at is the length of your credit history.
Right.
So one of the things that you can do is find a family member. This is like one of the easiest things you can do, because family's always going to typically help out family, but find a family member who has a great credit history, who has a long extended credit history with a high credit limit, and become an authorized user on their card. That puts you on the account. That doesn't mean that you have to actually use the card for anything or anything like that, but it then shows up. Some credit card companies take 10 days, some take 30 days for it to show up on your credit. But once it shows up on your credit, it's gonna like really boost your score, because it shows you having that credit history.
Wow.
And it also looks good to lenders.
Yeah, I never knew that.
Yeah.
Another thing that you can do is you can purchase a trade line. This is a different way about going about what I said, where you go out and you purchase a trade line that can be 8 years of good credit history with a $10,000 balance, 15 years of good credit history with a $30,000 balance limit, whatever. You can do that as well.
Okay. We got a couple of questions coming in. Brother Wilder is asking, what is the highest rate that is considered good that we should not exceed when we're talking about credit? And I think he's referring to credit card interest rates.
I mean, they're up there. you want a low interest rate, not a high one, correct? Or
Yeah.
Well, he's asking what's the highest rate that's considered good?
The highest rate that's considered good.
Like a rate, a percentage that you don't want to necessarily go over.
Let's try to backdoor that. Like if you're looking for a credit card, if there's 0% APR interest for the first 12 to 18 months, that would be considered something good. Is that?
That's good. I think he's want to know. Like,
I was just going to chime in to say, Brother Wilder, if you can clarify your question for us, so we can make sure we get you the right answer.
Cool. We'll backtrack to that question, brother.
Yeah, we go ahead.
He says, what are your thoughts on using secured credit cards to restore and rebuild credit?
I think they're very good. Most people can get approved for a secure credit card. With the secure credit card, you're basically putting the money down on the card, and let's say, for instance, you're gonna go and you put $500 into an account, and at the end of the day, that's gonna be your limit on your card, $500 down. That means you're securing the finances. The credit doesn't have much. The lender doesn't have much of a risk. It's a great way, and when you pull your credit report, it's still gonna show that you have a revolving line of credit, right? So using that, you just want to still make sure the key thing to that is making sure that you're still under your utilization. You got to keep that utilization down and pay those payments on time. So you open up that secure line of credit and make sure that you're paying those payments timely, not just doing the minimum balance, but keeping that balance under 30%. Remember, you want to keep it under 30%, most likely 10%. Try to keep it under 10%. But it's a very great way to build your credit.
And I'll just add that the first thing that I did, because I'm not as knowledgeable as these other two gentlemen on credit ways to improve your credit. First thing I did, I asked one of my clients who specializes in credit restoration and small business lending, a lady by the name of Christina Sheets. I'd say, you got to humble yourself sometimes and admit that you don't know everything. And so I say, hey, look, I know that you're good at what you do. I see you talk about it. I see the value and I'm willing to pay whatever it takes to make that happen. But it's, sometimes it's just internal, asking for help in areas where we're not, or we feel that we're not sufficient.
Agree.
Can you say her name one more time for those that were listening?
Oh, yes. Her name is Christina Sheets with Back Office Credit Solutions. I've been knowing her for several years. Really, really nice lady.
Yeah.
Awesome.
And if you don't have the money to pay for a credit repair service, the best thing you could do is just to educate yourself. I mean, there's so many different tools out there that you can find out about credit. You can look at Credit Karma is a really good tool that's pretty free. You might have to pay a little bit extra if you want all three reports from all three bureaus. But you can use all the free things first and then educate yourself on them and know what all is included in the credit mix. And then you can look at your credit report and just kind of prioritize what you can do. Like, you definitely want to make sure that anything that is in collections, you want to take care of that stuff first. You want to make sure you don't have collections. That's gonna hurt your score a lot. And then you can do some of the disputes yourself. If you see payment disputes that are over 30 days, 30, 60, 90 days, you can go into those different apps. Credit Karma will allow you to do the dispute directly from their app. So you can go into that and do a dispute on any of those things, and that'll help as well. So, like, just educate yourself and do all the free things. Do all the free things that you can for yourself. I have used credit repair agencies to work on my credit. They can be a little bit pricey, but make sure that, I guess, if you're going to use a credit repair agency, make sure you're using someone that can give you that education piece and someone that's not just sending these disputes on your behalf, right? You get a lot of people where you get lost in the disputes. You don't know what's going on with your credit. They're not telling you anything. They're just sending these letters each month, and you're not knowing what's going on. What should I be doing? Should I be opening up a secure card right now? Should I be doing it? So get someone that's going to actually educate you and keep you informed on what's going on with your credit while they're doing the disputes. And make sure they're not just filing. There's different types of disputes that they can file, right? So there's disputes that they can file that says, hey, this is not mine. I don't own this dispute. I don't own this account. It shouldn't be on my credit report. A lot of the credit repair companies do that dispute, but there's also companies that do disputes that try to catch these companies, because a company has to file things on your credit. They can't put some on your credit report without following a due process. And if they messed up anywhere in that process of putting something on your credit report, they can a good credit repair company can dispute that and then get it. They would have to automatically remove it. So don't just find these companies that are disputing some things and saying that it's not yours, because it probably is. But you don't want to find somebody that's just doing that dispute. You want to find a company that's doing those disputes as well as the disputes where they're catching these companies who have put stuff on your credit without going through the proper channels. Do those as well.
Yeah, the good ones, they'll give you a lot of free game. I do it all the time with tax. I mean, I'll tell you what you need to do. People are like, nah, look, you take it. So, I mean, like Matt was saying, keep money in your pocket if you can. And then, if you see it as a benefit, if you see the value, then seek that route. But you guys definitely gave some good tips on there.
Pam just made a good comment too. She said, you know, a lot of them allowed a free credit report for each company. And so, you know, if you're trying to monitor your credit, you can spread them out throughout the year and know exactly, you know, what your score is looking like. And along with scoring, you know, that tells us kind of the buying power that we have, right? For if we're trying to buy a car, we're trying to purchase a house. Let's talk about credit score and buying power.
Yeah, so I mean, when we're talking about buying power, just like you said, especially going through a situation like right now, we're seeing a lot less in expenses that we have to incur in the form of not having to pay for gas to go to the office. You know, for those of us who work from home, not paying so much in eating out, not spending money in toll fees and parking fees. It's giving us a lot more money and giving us more power to buy things, correct? So when you accompany that, you know, some people like right now want to take advantage of the low interest rates and say, okay, maybe now is a good time to buy a house, right? So when you do that, you just want to make sure that you have the necessary income and you also have that credit behind you that allows you to do that. But you don't want to do that when you think about when things start back up, if you're going to be in a bind from a buying power issue. Does that make sense?
Mm-hmm. And with this pandemic, we've seen a lot of people make the move to self-employment. And I mean, you got to understand the way that you take your compensation. You have to look out 2 or 3 years, because if you're looking to make a large purchase and you're just taking distributions from the company and then paying, you know, a little bit of self-employment taxes every year or whatever, put yourself on a W-2, because the banks are more apt to lend when they see that W-2 income versus I'm just pulling, you know, whatever as I need to support the household expenses. And then you can do, you know, play with the equity transactions once you get beyond those large purchases. But you know, and I know Matthew Winter can speak to looking long term, looking down the line. So if you know you want to buy a house in 2 years, start now putting yourself on a W-2 from your company, and yeah, paying the payroll taxes and all of that. So that when it comes time to make that purchase, you've established income on your tax returns for the past couple of years.
So what happens when you don't do that? If you start yourself up as being self-employed and you're getting money, you know, whether it's, you know, through checks here and there from other people or from one main system or one main company, but you're a 1099, how does that work from a tax implication standpoint?
So in your situation, and I'm not a mortgage lender, but in your situation, because of the length that you've been in your position or in your profession, I would be more apt to rely on that income. But at the same time, you know, my job as a tax professional is to minimize your tax liability. So we're looking for all the deductions, you know, but you may want to structure your operations in such a way in those years leading up to those major purchases that you don't have as many expenses and you're reporting a high amount of net income on Schedule C of your 1040. Or if you have an S corp where the income is flowing through, you know, pay yourself a salary versus having all that additional income flow through, because that S corp income is considered unearned income as far as tax return goes. That's the benefit of the S corp. You can take your tax or your compensation in 2 different ways. The IRS says that they want you to put yourself on wages once feasible, but then again, you know, they give there's a lot of relativity in there, because they say it's to someone similarly situated in your industry. So you can take $20,000 on W-2 and then take $120,000 as distributions, you know, and that distribution isn't going to be subject to self-employment tax like that, or payroll taxes like the W-2 will. So I mean, just kind of toggling how you pull money from your companies, how you operate your companies. And this is kind of a rabbit hole. We were talking about credit and mortgage, but I know a lot of entrepreneurs or those that want to be entrepreneurs have aspirations. Start talking to a tax professional now about what you want your 2, 3, 5 year goal plan to be. Talk to financial advisors. talk to people like Mr. Leon. It's Leon or Leon?
Leon as well.
I almost got you almost said Mr. Leon. No, but I talk to individuals that are knowledgeable about making these large purchases. And Matt, with his experience with Bank of America, I can only imagine the wealth of knowledge that you've accumulated, as well as your time with Ernst and Young, which you was telling me about earlier.
So, going ahead.
Good about.
I'm sorry. Go ahead.
And I was saying, if I don't know the answer, I'm really good about finding the person that knows the answer.
There you go.
Guys, going hand in hand, credit utilization and buying power. We got a couple of questions that came in. Brother Hutchinson asked, is it better for your credit to maintain a monthly car note or pay it off as soon as you're able to do so?
Is it better?
Is it better to
pick it up again,
or to try to hurry up and pay it off?
I mean, in my experience, having those on-time payments on a monthly basis just shows how you are a good borrower because you're making on-time, timely payments. And it adds to your credit history. Obviously, paying it off is good. And if you want to pay it off as fast as possible, that's fine. That just shows that also, hey, we can let you borrow the money, but you're going to give it right back to us. So you're a good borrower at that point.
And I think you got to take the interest rate into account as well.
Exactly.
And what is your cost of capital?
Yeah. If your interest rate is high, you want to pay that off as quick as you can. But it's also a matter, too, of knowing on your credit report, a lot of things affect your different stores. You don't want to have too much installment debt. You don't want to have too much, it all depends. Like revolving accounts are great. Like having a revolving line of credit, that's great. You don't want to get into a point where you have too much installment debt. So if you already have a high balance in installment debt, it might be better to go ahead and pay your car off, quicker. So. And I think there was a question about the interest rate, and I think the person was asking what is considered a high interest rate. Whenever you get into like above 25%, you're kind of in that category of being considered subprime lending. So you don't want to get a credit card that has like the interest rate is probably like 25% and more. You kind of want to get lower than 25%. So.
Okay. We got another question that came in from Brother Edwards. He said, could you talk about what credit score ranges are good when considering purchasing a house?
We're going to have to get Mo on here.
Yeah, you might have to get a lender on. I mean, I have a client who is a lender, and he told me that 650, he could get you into a house with a 650 credit score.
Yeah, there's so many things out there. There's so many different things. It depends on what type of loan you're gonna do. With FHA loan, your credit score can be as low as a 580. Right now, that's probably not good. I think right now with COVID, you want to have as high of a credit score as you can because a lot of the lenders right now with COVID have become stricter. So those 580 guidelines that people were getting into houses with right now, the lenders are saying, no, I don't want to take that risk. And they're raising those right now to like at least a 640. So you probably want to have at least a 640. And I think for a conventional loan, which would be like with Bank of America or Wells Fargo. I don't want to just plug Bank of America. So Chase, any of those, they probably, a 640 is probably going to be the score that you're looking for a conventional loan. 640, that's on the low end for a conventional loan. But FHA loans, I've seen people get into homes with as low as the 580, and there are, and you can with the FHA loan, you can actually go lower than a 580. You would just be required to pay 10% versus the 3.5% down. So there's a lot of different options. There's a lot of different home buying programs. I am going to plug Bank of America right now. We do have some really good home buying programs for first-time home buyers. So there's a lot of different programs that you could use, and you should definitely take advantage of those. There's so many different the city of Dallas. I think the city of Dallas has different programs for you if you're a first-time home buyer. So there's a lot of different options. So
cool. We got one more question coming in. Tatum asks, are there any cons to refinancing a mortgage?
I would say no. If you're going to get a lower rate, there's not. I would even advise anybody right now, even if you're in a situation where you can afford your home comfortably, even right now, like if the rates are so low right now, everybody should refinance low.
What I've been told, and you guys can speak on this, what I've been told is it's not actually worth it to refi if you're not getting more than a point or more lower in interest rates. What do you guys think about that?
I think that's because of the closing cost, because you're going to have closing costs all over again. So I think and this is, I guess, would require sitting down and just kind of looking at, all right, I'm gonna have to come out of pocket $3,000 or $4,000 on closing costs, but what am I saving over 5, 10, 15 years, depending on whatever your payoff goal is. So but right now, I mean, if you're saving a point right now, I really don't see why you wouldn't, other than not wanting to go through the hassle of it. That's really my thing right now. I've been in tax season. We're still in tax season, seems like. So I just haven't sat down with my lender, but
yeah. And I know there's a lot of tools out there that'll allow you to kind of process the numbers for you. And you can walk through and you can say, okay, this is how much I owe my current, this is how much it's valued at. This is my current rate, and this is what I can, if you do have to put something down, it'll let you know what those numbers look like. And you can determine at that point, is it worth me refinancing at this time if I'm only going to save $20 in the long run? It may not be advantageous to do so.
Cool. We got another question come in, and guys, we're gonna do a Q&A session at the end as well. Brother Bess is asking, should we trust the companies that say you will fix your credit for this amount of dollars?
Listen.
How do you guys feel about certain credit repair companies?
Do your research, due diligence. You gotta look people up, see what they're about, follow them, see if they're putting content out there, and then see if it's credible content. I mean, there's a little bit of personal responsibility. Just like we're not gonna walk up to the drain and we see it down there with the balloon talking about, hey, you want to play? This don't look like a nice situation. This don't look good. So you got to do a little due diligence. And then at the end of the day, go as far as your risk tolerance allows you.
I will say, don't expect somebody to fix your credit in 30 days or 90 days is even a stretch. You got to be patient with it too. You're probably looking at 6 months to a year for your credit to get probably where you want it to go. So if anybody's selling you a dream of like, I'm going to have you going from a 590 to a 720 in 30 days, it's probably
scam.
Probably right. Scheme.
And on that note, there's a lot of tax preparers out there saying, look, I guarantee you $3,000 refund. Look, without knowing the situation, if you can guarantee a refund, you're a bad boy. You're also a criminal.
All right, so let's move on into our next topic, because I know we had when a lot of people saw this one coming up, we had a lot of questions regarding this topic, and I hope Brother Jackson is still on the line with us. We're going to talk about financial investing. Let's kind of talk about stocks and bonds, where we're putting our money, our retirement accounts, our 401ks, our 457s, our Roth IRAs. Let's talk a little bit about financial investing. And Matt, I'm gonna let you actually take the lead. Winters, I'm gonna let you take the lead on this one, because I know you have a lot of knowledge when it comes to that particular topic.
Well, how much time do we have?
Keep it short and sweet, but
hit the main points.
Got you. All right. So, let's just talk about market investing. What's up? Let's just talk about market investing. So some key things that you want to take into account when you're investing into the market. First of all, Vince just alluded to it previously. It's your risk tolerance. So understanding what your risk is going to be, understanding that, are you going to be an aggressive investor? Are you going to be a moderate investor? Are you going to be pretty much safe, right? Also, you want to understand what your time horizon is. So for instance, matter of fact, Virgo season, I'm about to be 38, right? So I'm about to be 38. I want to retire. That's what I'm talking about. I want to retire at 65. So my time horizon is the difference between 38 and 65. So I still have time to be aggressive in what I invest. But as I get closer to 65, my aggressiveness is going to be dialed back. And so when you think about when you're investing in the market, you're going to invest in stocks, right? Shares of companies. You're going to invest in bonds, and then also you'll probably have a cash portion of your portfolio for liquidity. So as you get closer to that time horizon of 65, in my case, you're going to see your stocks start to dwindle down in how much you own, and own more in bonds, because obviously bonds are safer, and own a little bit more in cash for liquidity. Okay, so we talked about time horizon. We talked about understanding what your risk tolerance is. Also, you want to look at the allocation of assets. So, for instance, when you're investing in the market, first of all, you got different platforms you can invest in, right? But you want to look at it like this. So let's say you do an IRA or a traditional or a Roth. The tax implications on those are different, and I'll let Vince talk to that in a second, but I'll talk to you about the differences between each of them. So for instance, let's say I have a traditional IRA. Okay, I'm sorry, I was reading that. So let's start with the traditional. I was thorough. So let's start with the traditional IRA. Obviously, depending on your income limits, right? And also, depending on how much money you make, that can be tax deductible, how much money you put into a traditional IRA, okay? Because it's something that you put money into post-tax. It grows tax deferred. And then at the end of it, when you want to withdraw, you do have to pay taxes on it. Again, Vince can speak to that. Gotcha. Again, Vince can speak to that. So one of the good things about that right now, especially a traditional IRA, you can contribute about, I think it's 6,000 right now is the contribution limit.
Yep.
At 6,000 is the contribution limit. Now, if you're over 50, you could contribute an additional 7,000, right?
Yep, 7,000 total.
Yeah, 7,000 total. So it's going to be an additional 1,000 that you can contribute to that. Vince, do you want to talk about the tax implications on that?
Yeah, so essentially, like Matt hit the nail on the head, is tax deferred. So, honestly, right now, I'm of the school of thought that the tax rates now are the lowest they're going to be for a while. I just don't think the U.S.'s balance sheet can sustain tax rates as such, being so low. Then again, you have people on the opposite end of the spectrum that say, oh, okay, well, it's not really that low. The corporate breaks didn't really mean that much, didn't change much. I would say right now, I would pay the tax and look at vehicles like a Roth. Those type of things are interesting to me, but there are also thresholds there. So you have to have a Matt and you have to have a Vince, someone that knows how to get you into these vehicles and when to pull you out, and then someone to tell you, all right, what are your tax consequences now? For those that are over 70 and getting RMDs, required minimum distributions from these plans that you've been accumulating over the years, there was a provision in the CARES Act where you can suspend those RMDs for the next year, effectively reducing your taxable income if you have it coming from other sources like Social Security. If your Social Security can sustain you, you don't have to incur the additional taxes there. In my eyes, I view it as that's 1 year more 1 year more inheritance that can pass on to the next generation. But it's so situational. It's different. Everyone has a different situation. Everyone has different goals. So that's what I enjoy most about this work, is sitting down and hearing what drives everyone.
That's good stuff. And so to that point, let's talk about a Roth IRA. A Roth IRA is similar, with the exception of it's not tax deductible. You pay into it with after-tax contribution. I mean, with after-tax income, it grows tax deferred, and then your withdrawals are also tax deferred. And also, I believe the RMD treatment on it is different as well. So when you talk about a Roth IRA, he talked about limits, right? So there's phase outs, what we call phase outs, and that's based upon your earned income. So for instance, if you're married filing jointly, I believe the phase out for something like a Roth IRA is going to be, is it 169 a year, or no, 189 a year, right? Let me pull up my tax chart.
Yeah, it's like 196.
196
now.
It's between 196 to 206,000. So if you are a married couple filing jointly, you make 196 to 206 on an annual basis, you can't contribute to a Roth. Does that make sense? And the same rule applies for a single person. A single person, if I'm looking at it, it's what is that? 124 to 139. So if you're making that much a year, you can't contribute to a Roth. Now, there are other non-taxable long-term savings vehicles that you can put your money into to accumulate wealth. However, most people who are making this right now, if they don't have somebody like me or Vince, then they're just utilizing a traditional IRA or even a company 401k.
Yeah.
Do I need to take questions?
Oh, what's that?
Do we need to take questions on those two before I move on?
Yeah, let's dive into 401k for a second, because I know a lot of people have that offered at their particular institutions, and they want to know exactly, what to do with the 401k and
So basically, a 401k kind of acts just like a Roth a traditional IRA. Now, 401ks can have a Roth component, but that's if your company's broker dealer is going to offer that, or whoever's managing that plan. But a 401k works just the same as a traditional Roth IRA. Depending on your income, what you put into it from a contribution standpoint is tax deductible. It grows tax deferred, and then it's taxable on the withdrawal. Okay? Does that make sense? Now, most companies, when they offer you a 401k, they give you the ability to pick and choose what you want to be housed within that 401k component. So typically, most 401ks are going to be comprised of mutual funds. And so within these mutual funds, it's just a family of funds, and it'll be comprised of things like international markets, small cap, large cap, different fund families that you can put money into. So some of these things are aggressive, and others are going to be non-aggressive. For instance, like bonds. So it's just again understanding what your risk tolerance is in that regard. And also with your 401k, you can typically change it pretty much at any time, how you're contributing. So most people, I tell them, most of my clients, if they have a 401k, I'm going to let them know when you're investing, it's driven a lot by emotion. So you have to remove the emotion out of investing and understand that you're in this for a specific amount of time. So that being the regard, for instance, right now we're going through COVID. Just like 2008, you saw a lot of people lose money in their company 401ks. And even back then, some people had pension plans that they were losing money in. So just because you're losing money now doesn't mean it's not going to be that way always. The stock market continues to do this, right? It continues to do that. So within your company 401k, sit down with the advisor for your company if you have one. If you have a personal advisor, sit down with them, let them educate you on your 401k, what advantages you have, what disadvantages that you have, and how you can really place yourself in a position to win in terms of hedging against the market when we have a downturn like we're seeing right now.
Yeah. Kyle, you 19,500.
19,600.
Yeah, 19,600. Yeah, there we go.
19,600.
Yep. And then an additional 6,500 over 50.
Right.
No, I was going to ask you. You mentioned the component of either the traditional or Roth IRA in conjunction with your 401k. How does that differ from, I guess, an IRA that you will get from a normal or the traditional bank or something like that?
So your 401k can have a Roth component to it,
right,
where you can contribute into it with after-tax dollars instead of pre-tax dollars, so that you can have a little bit of a quote-unquote tax-free retirement asset versus just a taxable retirement asset. Does that make sense?
Gotcha. Okay.
Now you're saying a 401k versus an IRA, a traditional IRA. A traditional IRA is going to be something that's self-directed by you. You can schedule contributions to go into it. However, it's more like dollar cost averaging. You put money into it whenever you want to, because that's something that you set up on your own personal time. Whereas the difference also with the 401k is that the money that you put in, you got somebody possibly giving you a match. For instance, your company's probably going to give you a match, right?
Yes.
So that's how they're going to be, whether it's 4%, 6%, or 3.5% for every 4%, whatever it is.
Yeah, I know that was one of the first things I think my parents and either elders told me when I first started working is if they have a match, make sure you take advantage of it, because that's literally free money that you're leaving on the table.
Exactly. And you got a lot of people out there that say, oh, well, and it depends on the income bracket that you're in, but people will say, oh, well, I want to max out my 401k. And again, depending on their income bracket, I might tell them, hey, you don't necessarily want to max out your 401k. I would say max it up to the point to where you're getting a match. But if you have any extra money after that, let's find a different savings component or savings vehicle that we can put that in, and maybe even a tax-free component that we can put that in, so that you can have some balance there.
Mm-hmm. And speaking of 401k too, could you anyone on the call speak about, when do you think it's best if you need to borrow against your 401k and take those early, penalties?
Well, the CARES Act has some provisions in there. I think you got muted, Walt.
No, I did that on purpose. Sorry.
Oh, my bad. But yeah, the CARES Act had some provision. I believe you could borrow like $100,000, and as long as it was paid back over a certain time period. Like I said, I've been in tax season since February. It seems like we went out of tax season July 15th, went right back into extensions. So I'm looking forward to doing a lot more continuing education on all of the developments. But I mean, there's a lot of little things that are in there that are going to fit various situations. So people with passive income may find some benefits. So if you got mailbox money, rent checks, things like that coming in, there's some benefits out there. But as far as the 401k, borrowing against, I think it's the biggest one I've seen so far. And that's just from a tax perspective.
I mean, I've never. It's all dependent upon your situation. If you need emergency funding for something that you absolutely need to have it for, and that money is there for you to take from, then obviously you do it. But I don't encourage it. I don't encourage taking from your 401k unless you absolutely have to.
You absolutely have to.
Yeah. Otherwise, you're stealing from your future self. That's what I call it. Especially if you don't have any intent on giving it back.
And the 10% penalty on top of that if it's not a qualified move.
And then also you have to take into account state income tax penalties as well. So you can take from it and incur a 10% penalty upon withdrawal, but then that next following tax year, if I'm not mistaken, Vince, if you have state income tax, you got to pay for that as well, right?
It depends on the state, but I'd have to get back to you on that one. But yeah, it sounds probable, but I just can't tell you which states actually do that. I know Texas is, we don't have an individual income tax. That makes everything great around here.
What are your Matt Winters and Vince? I guess Matt Winters, what are your thoughts on? I know a lot of people borrow from their 401ks to put money down on their homes, and then there's certain tax implications on that as well. I think they're less. I think the tax implications are less stringent when you are doing that to put money down on a home. What are your thoughts on that?
I mean, again, from a borrowing standpoint,
you can put it back, especially if
from a borrowing standpoint, again, that's fine as long as you plan on putting it back. From a taxation standpoint, however, I'm I've never been in that situation, so Vince could probably speak to that.
You have a window of time to put it back, but if you're borrowing for a home, more than likely you're not gonna make it back within that window. Like I said, with the pandemic, hopefully this is a one-off type of year. You have more leeway as far as the term that you have to pay it back. But most cases, I believe it's like 60 or 90 days you can put it back without incurring that 10% penalty. I mean, and most people aren't going to be able to put back a down payment on a house in 60 to 90 days. I mean, I think there are good times to borrow from the 401k. I mean, I see it every day. The entrepreneur comes in, he or she has a business plan, and the only capital that they can get their hands on is what they've saved for their retirement. I did it myself. Drained everything I had saved. Now, granted, I only had like 6,000 or 7,000 saved, but I bet it on myself, and it eventually paid dividends. But that didn't mean it wasn't hard. But it depends on what that individual is going through, what their plans for the money will be, and I guess the drive, the determination to stay ahead as far as making that 10% penalty worth it, making that additional taxable income that you're going to have to pay taxes on worth it. So is it worth it? And it kind of comes down to like a personal thing.
I think we had one more question.
I think it was on the financial investing part of it. Brother Edward says, do you recommend investing in mutual funds or buying stocks of individual companies, and which is better?
In my experience, I think it's good to have a balance of both. I look at the stock market as a form of gambling, right? And legalized gambling, but I think you also need to have some what you call, not necessarily fun money, but some income that you don't mind losing to put into stocks. In terms of mutual funds, I think they're more so of a long-term, safer bet.
And Matt, can you break down the difference between mutual funds and stock?
Yeah, so a stock is going to be like a share of a company, right? So basically, like if, let's say I pull up Robinhood, right? And let's say I want to buy Apple that's selling at, let's just call it $331 per share. And let's say I want to buy 10 shares of that. So I'll spend $3,000 some odd to buy 10 shares of Apple. That would be considered stock, okay? When you talk about mutual funds, again, that's going to be a family of funds. So let's say if I want to put money on international markets, that's going to be a like for instance in American funds. So if I go to American funds and they have international markets in there and these different families of funds, I'm putting my money in that family to make the money for me. Does that make sense? So it's putting your money with a group instead of putting your money with an individual. Me personally, I do both because I believe in balance.
Awesome. And Pam is dropping this knowledge for us in the comments as well.
Pam, we're going to get you on here next.
That's what I told
her. Where the real estate gurus at? I see it. Mo they're talking 1031 exchange.
What is that? I saw he mentioned that. What is a 1031 exchange?
It's like a tax deferral mechanism where you sell one investment property. And when I say property, it doesn't necessarily have to be real estate, but you sell one thing and within a certain time period and within certain rules, which the real estate people can really go into depth with because they use it a lot. But within the certain boundaries, you can put those proceeds into another qualified property, and it's almost like you're deferring the gain. You put it into the property, then it doesn't come taxable until the property is sold. When you sell that property, you take the funds, you put them into another qualified property. And in between these 1031 exchanges, you may have to pay a little bit of the gain depending on what actually rolls into the other property. But it's a way to defer the gains and I guess help as far as leveling up.
So basically, you start with a smaller property, and then smaller in terms of value, and then you just keep moving up and up and up.
I mean, essentially, you could. I mean, that would be ideal if you ask me. But like I said, there's going to be some there, or possibly more than likely be some tax consequences or tax effects in between these transactions, the 1031s. But if you took $100,000 proceeds from the sale of one house and put it into $100,000 qualified property and within the rules, you essentially defer that gain. So say you bought the first property for $50,000, sold it for $100,000. Now it's worth so you realize a $50,000 gain. You take that whole $100,000 and put it into another property. You're pushing that gain down the road, kicking the can down the road a little.
We got a question that came in from Brother Crawford. What are your feelings on 80-10-10 loans for buying a home?
I'm not familiar with.
I didn't do it. I didn't do an 80-10-10 loan. So.
I mean, we got some real estate people in the comments.
I mean, I think you know, from what I know about the 80-10-10 loans, I don't think it's a bad idea if that's the route that you want to go. I think most people do the 80-10-10 loan because it helps you not have to pay the private mortgage insurance, right? It's basically taking out it's basically like taking out a secondary mortgage, so that you don't have to pay that primary. If you don't have the down payment, like a 20% down payment, you can basically take out a secondary loan to help you pay for a down payment. And I mean, I don't think it's necessarily a bad thing. I think, it just depends on your situation. It all comes out with the home buying stuff. It all comes down to that rate, that interest rate that you're going to get. Like if you get a good interest rate, and depending on your situation, how much, free cash you have, I think it all depends on your situation. But I don't think it's necessarily a bad idea. I think it's smart to avoid that mortgage insurance, unless you're going to do like the FHA route and then refinance and get into a conventional loan where you can get out of the private mortgage insurance. I think that's a good way to go too. But so those are my options. I think refinance and go FHA route, and if the rates are lower up to FHA route, refinance and then get into a conventional loan situation where you don't have to pay that private mortgage insurance over a long period of time, or do the thing that you're saying, which is the 80-10-10, which is also referred to as a piggyback loan or whatever. You could do that as well, and it will help you avoid the private mortgage insurance. I think paying the private mortgage insurance is a waste of time, but I mean, some people can't avoid it. You don't have most people don't have that 20% to put down on a home if you're doing a conventional loan. So I think if it's gonna save you money over time, it's a good way to go.
Can somebody please kick X out of the comment section? How do you feel about putting bills on your kid's name to build credit?
No, but actually, Brother Brown tackled that earlier. He said he did put credit cards in his kid's name and started it. It started her off as soon as she got out of college with to get credit.
Yeah, I think you have to give
I picture somebody putting a utility bill in a kid 4-year-old's name.
I think something else to talk about too, Vince, or when you talked about entrepreneurs, is actually putting your kids on a payroll.
Oh yeah.
For instance, if I got 2 kids, I can put them on payroll, and what I pay them, they can actually pay their monthly payment for their school with.
Private school, yep, all of it. Yeah, so there's an exception for computer taxes, so you don't have to pay. A child is making under standard deduction for 2020 is $12,400. A child that's working for a family business and making less than that amount does not have to pay. There's no need for federal withholding, and they have an exemption from Social Security and Medicare. So that's just money you're keeping in the household for them to do routine tasks, filing, come put some pledge on my desk and get the cloth, whatever. And then they can, like Matt said, you can use, that's a back way to get a deduction, if you will, for tuition costs to primary and secondary education, or to primary education. So the private schools, the elementaries and the middle school, high schools, to get a deduction there, you can use it like that. Or some parents just want to teach their children about money management. And so, you tell them that they're responsible for a certain amount of the bills, whatever you want to do, teach them the value of the dollar. One day when my kids get old enough, I'm gonna be like you, man. I'm gonna make them work for me. But now there are caveats. So if you're an S corp or a C corp, large corporation, this isn't available to you. But there's ways around that, such as setting up a family management company on your Schedule C. It could be a sole proprietorship or a partnership, but as long as it's managed by, both parents as the only partners, or one parent is 100% owner, they can pay that child. And then you would just, as the S corp or C corp, would then pay the family management company to handle their HR. You work around, you use the tax code to your advantage. And then the family management company pay the kids, and they're still entitled to that FUTA exemption that we just spoke about. So, you got to get creative, but don't get too creative. You get too creative, that's where people get caught with evasion. But tax avoidance is perfectly legal. Tax evasion is a crime.
Vince about to get like 500 calls tomorrow. How can I make my household a business?
It's okay.
These kids need to go on payroll. I'm getting AAU.
Put them on the payroll.
Vince, we stand with you. We kicking it back over to you to talk about income earning and taxation, since you already kind of touched on it a little bit. Talk to us about them taxes.
Yeah, so I specialize with small, mid-sized companies and their owners, helping them to pretty much keep as much money in their pockets without having to pay Uncle Sam. Yes, we all have to pay our fair share of taxes, but that goes back to what I just said. Tax avoidance is using the code to your advantage. Recently in the news, you see the president talking about, you see articles about the president hasn't paid taxes in years because he has a gain, old law that just keeps rolling forward. Use the tax code to your advantage. That I don't have a problem with, because you're just using what they put out there. But then you have tax evasion, the Capone, what took Capone down or whatnot. Not claiming your income. So if you're a cash business, you're in a nested kitchen and you do eyelashes, or you're a barber, you cut hair. I'm licensed by the Texas State Board, and this is covered, so you need to claim all of your cash and credit receipts. But if you didn't, as a barber, and you only want to claim 80% of it, that's different than not claiming. Saying that I'm not going to claim 80%. So tax avoidance versus tax evasion. But as a self-employed individual, there's a lot of different things. You got the SEP IRA where you contribute like 50%, I believe 50% of your compensation for that year. So you have higher contribution limits than the 401, or potentially higher contribution limits than the 401k or the or traditional IRA. It's just being smart, being savvy about things. So say you buy a house. Let's go back to that. Buy the house for $50,000. And it's an investment property, and we're going to sell it for $100,000. If you bought it in June and sold it in July, that $50,000 is taxed as ordinary income, meaning whatever tax bracket you end up in, you're going to be taxed at. But you're going to pay tax on that house. But if you waited a year, sold it, then you can take advantage of long-term capital gains taxes. So be smart about what you're going to do with in your planning.
Vince, let's talk about, because you even shed some light on it to me on this. as a CPA, let's talk about the differences between actually using a CPA and like using your blocks or your TurboTaxes to file your taxes.
Okay, so first off, all CPAs are not the same, and all tax preparers are not the same. There are a lot of very competent people out there that don't have a CPA designation and that prepare taxes, and they do a great job. They're very thorough. So hats off to those guys. But at the same time, you have to do your due diligence on some of these people. If someone's promising you a $3,000 refund, off the bat without even knowing if you have kids, is it a 2-income household? Do you have self-employed income? Like, you gotta be leery of somebody promising you something and they don't know anything about you. So you have to do your due diligence. And with the CPA, more oftentimes than not, it's going to be more of a personal relationship, especially when you're looking at a small to mid-sized firm. Now, and I mean, even with the big company, I mean, Matt, you spent some time with Ernst & Young. I'm sure you guys have representatives that have personal relationships with their clients. But with a CPA, that's what you're going to get. I sit down with my clients. I talk to them a couple times throughout the year, and they know that they can call me and ask me a question that's going to take me 5 minutes to answer. And I'm not going to gouge them and turn the clock on, start charging them once they call. But then you also have you have CPAs that do that. So it's a matter of finding somebody that fits you. Sometimes I like I've been told that I can be talkative. I think that I'm more so I like to get the business done and get going. I've been in CPA offices where they hold you there. They're done with the work and they hold you another 30 minutes just talk. Oh, let's get about this business. So find somebody their energy matches your energy. Because that talkative client is going to love that talkative CPA. So tell them, be honest with them. Tell them your goals. Tell them where you want to go. Tell them where you messed up. And that's where we got to humble ourselves sometimes. Where you messed up, because I can't help you if I don't know the whole truth. Just like an attorney, I can't defend you if I don't know what actually went on.
So Vince, we talked a little bit about the benefits of having a CPA and when it's beneficial and when it's not. And you talked to me about tax deductions and what you can claim. When is it actual? What threshold to hit is it actual beneficial to have a CPA?
I mean, once you go beyond just W-2s, you may want to start talking to someone. Especially you start venturing into the passive income activities. So you get heavily invested in the stock market. You start rental properties. And you realize that you're withholding 15-20% of your W-2 every year, but for some reason you're still paying taxes. Now it's time to talk about where can I put some of this money. I mean, I don't want to say I don't want to say there's a threshold, because knowledge is knowledge, and depending on who your CPA is, are they investing in you? Are they teaching you? And I believe someone alluded to that. I believe it was you, Matt, alluded to the credit restoration person. Are they educating you along the way? I would say if you have a couple of W-2s, you're married, you have a couple of W-2s and some kids, you can do that yourself. And take the time and learn. But once you start getting into passive income activities, I would say it's time to start to talk to a professional.
And I guess a piggyback question along those same lines. You talk about personal relationships with your CPA or financial advisor, and Vincent, Matt, you can chime in on this too. How do you create those relationships, business relationships, if you already have a personal relationship with that person? So say, for instance, I'm always typically leery about, my new friend that just became a financial advisor, new friend just became a real estate agent. Now I need to trust them with my, sensitive information. Like, how do you deal with that? Or how do you, walk your clients through, some of those questions?
Look, my daddy still won't let me do his taxes. I've been trying. Look, he's the only person in the family won't let me do their taxes. I mean, I guess he just don't want me to know what he makes. And I have friends who have told me that their wives have similar concerns. That's fine. You just don't push them. They know they see the value in you, or in what you do, and they know you're competent. It's just a matter of comfort level. How much do you want to remain personal? And I'm perfectly fine with that. If they ever need me, I know my friends are there, and just steamrolling on that. Just keep going on that. My friends, when they come to me, I love you, Dave. But my friends know that when they come to me, or I know that when my friends come to me, they're willing to pay. I give discounts if I feel like it. So on our side, it's, hey, if you're gonna come to me, be willing to pay. If I feel like giving you a discount, or if I can afford to, I will. Now I don't make strong practice of that, but there are people that I throw some freebies out there, especially if a person's in need. So it's, I don't know. Don't pressure the people around you. That's what the multi-level marketing people, they recruit you to pressure people around you. We don't want to do that.
Vince, speak briefly for me on tax write-offs. I know we have a lot of people in our network that do a lot of donations and things of that nature. So speak briefly about tax write-offs.
Yes, I mean there's a ton of them. For instance, with 2020, with the passage of the CARES Act, normally you take your itemized or you take your standard deduction. And after the new tax code came out in 2018, the standard deduction is almost always going to be the one that's taken because it takes so much to exceed the increased threshold of 24,000 plus. But with the CARES Act, now you can deduct a portion of your charitable giving. So this was instituted to help 501c3s and nonprofits keep going during the pandemic. So it's $300 to some. That's not much, but hey, I wasn't born with silver spoon in my mouth. I can do a lot with $300. So you get an additional $300 deduction in conjunction, or no matter if you take the itemized or the standard, you get that additional $300. What's that?
You just mentioned it. What? Talk to us about the difference between itemized and standard deduction.
Oh, yeah. So itemized, you have your medical expenses to the extent that they exceed 7.5% of your adjusted gross income, aka AGI. You have your property taxes up to $10,000, mortgage interest on your home, charitable contributions up to 50% of your AGI, I believe, or maybe 60%. But and they did away with a lot of other things like unreimbursed employee expenses. So Denard, you work for TI, correct?
Correct.
You go out of town and you pay for the lodging for a seminar or something because they're telling you to go. You have to go. You go out of town and you pay for everything. You can't claim those deductions anymore after the 2018 of the new tax code in 2018 did away with unreimbursed employee expenses. And so that's another thing. You got to get somebody that likes to learn when you're looking at someone in the finance industry because things are constantly changing. Like I said, once 9, 15, 10, 15 hits or passes, I'm going to be doing a lot of in education because there's so many little things that see through in these bills that don't make headlines, but it can show the value that you have for your client. So, a standard deduction, by the way, is just 24,000, was 24,400, 800. I mean, they index it up a couple hundred every year, but in 2018 it started. It's going to be 24,800, I believe, in 2020. Small businesses, miles, be mile like you. It was 58 cents a mile in 19. These are deductions that add up that you're not going to see on the face of your profit and loss statement all the time. There's so many out there that I like to hear people's stories so I can know which ones apply to them and be able to pull them out of my bag. I'm in my bag.
We got one question that came in real quick. He said, could you explain AGI?
Yes. So adjusted gross income is before you get down to taxable income, you have wages, interest, dividend, taxable portion of Social Security, retirement. All of your forms of income come in, and then you have adjustments. There's about 12 of them. So you have $250 for teachers, educators get to write off $250 just for supplies that they bought during the year. You have the deductible portion of self-employment tax because as a self-employment person or individual, you're going to pay the employee and the employer side. What they do is they give you an adjustment. They reduce your taxable income down for the employer side. Self-employed health insurance, tuitions and fees deduction, HSA. I mean, there's several of them, but those things. So you have your income, then you have your adjustments, which take it down, and then you arrive at your adjusted gross income. From there, you take out your standard deductions, with certain credits, and you get to your tax or taxable income, and then you pay your tax or you calculate your tax.
Appreciate that, Vince. Appreciate that.
Those things are also changing every year as well. So, I mean, that's why you got to get somebody who likes to learn.
Good. I think that's a wealth of knowledge you just dropped on us. So as we transition to some of our last couple of topics, let's talk about a hybrid of topics here. You know, educating ourselves. How do we do so? You know, looking for helpful resources, and then just beyond that, how do we ask for help when we need to? When we need that help. So let's talk through that. I think Matt, Brother Leon, want to kind of guide us through that conversation.
You can start off with just Google. Actually, there's that the internet is powerful. You can start off with Google. I'm getting ready to go through the home buying process, and before I did anything, the first thing I did was just Google and see what was out there, what kind of programs and things were out there. Your bank has a breadth of knowledge of things that they just put out there as well. Like in Bank of America, we have. I was looking at stuff and I found just home buyers courses online, just different things like that. So checking with your bank, also not being afraid to talk to a financial advisor if you can. I don't know if what your situation is or if they're charging you just to talk to them or not, but don't be afraid to talk to someone like a financial advisor and sit down and kind of map out something with that person as well. There's a lot of resources like that. And then there's organizations that are out there that put on these type of things all the time. Alpha Phi Alpha. I'm also a part of National Association of Black Accountants. We do these type of programs all the time. That stuff is available to you. National Black MBAs, they do these type of programs all the time and bring in financial advisors and things like that, so you can come in and ask these type of questions. Take advantage of those different types of things and those resources that are out there that are for you, that are free.
And Matt, correct me if I'm wrong, but I hear that financial advisors and individuals with the bank, they're searching for these opportunities to get out there and present.
They are. That's absolutely correct. They have them all the time. They publicize them. You have to go onto the bank websites a lot of times to figure out when they're having these different types of events or different types of open houses. That's the time where you want to go in and find out. And then that not only helps you to get information that you want, but it also kind of helps you build a relationship. So you take advantage of that way.
Anybody else have any other suggestions on how to, which resources that have worked for them or they've recommended to others?
I think one thing that Vince mentioned earlier is it's all about reaching out to those people because you're not going to have all the knowledge and all the answers, and you're not going to find all of the answers on Google. Google, when you search, it's going to pull up a mass amount of information that is a little hard to digest at one point in time. So that's why it helps to have the people around like these gentlemen that's on with us tonight. Spreading this knowledge. So I think that's the biggest thing is that you try to surround yourself or seek out those people that are knowledgeable on these topics to kind of help you through these particular topics and issues.
One other resource I want to throw out there is that one of the main keys to financial literacy that we don't abide by a lot is just have a budget. Like really do budgeting. and stick to a budget. I mean, as long as you're doing that, you can see it helps you see where your money is going. You might look at something like, dang, I spent, you know, $100 on just like junk food or this and that. Like have that budget. There's an app that I use. It's free. It's called the Albert app, and it will literally like go through your phone and do your expenses for you, show you what you're using your money on, help you build a budget for yourself. You can also use if you have like Microsoft 365. Um, there's different budget templates within Excel that you could use as well that will help you build that budget out. But it just helps you look at where you're spending your money, especially if you have different goals, not even just your long-term goals, but your short-term goals as far as, maybe in the next 2 years you want to buy a house or you want to buy that new Porsche, you know. Um, use that use those tools to kind of help you build out some savings plans and see where your discretionary income is going and where you can move things around and play with things. So I'm not saying you have to be a stickler to budget. It's hard, but you have to. The more you practice it, the easier it'll become. So
I will also say that a lot of people have a negative connotation with the word budget, right? You think budget is like diet, meaning I can't do something, right?
yeah.
It is.
So a good trick that I use, not just for myself but for my clients, it's spending plan. What's your spending plan? What's your monthly spending plan? What's your annual spending plan?
That boy got knowledge.
Like that's a good trick that I use just from a psychological standpoint. To same thing that you're saying, Matt, but just have a spending plan.
Yeah.
I saw a question, or actually two of them. Brother Crawford said, "Is it if your account is in collections, who should you pay, who is it better to pay?" I've heard to go to the original person that you owe or company that you owe. I don't know though for sure because I'm not a credit specialist. I was seeing if anyone else had the answer to that. I would think whoever filed it on your credit report would be who could remove the negative or any possible negative remarks that were on there. So I would assume I don't know.
I mean, most of the time,
wait a second. Don't they kick it to another collection agency though? Like if they're not getting you to pay it, then it'll go to a secondary agency who will buy the debt from them, and they'll try to contact you to get you to pay it. Isn't that how it works?
That was my understanding of how collections work.
They sold it off, right? So you should probably pay the collections agency, but before you pay them, what you want to do is to send them a letter and make sure you get in writing saying that they're going to remove it from your credit report. If not, honestly, you might as well just leave it on there and get a credit repair specialist to just dispute it, and then you won't pay it at all. It might sit on there for some time, but unless you're getting it in writing and they're saying they're going to remove it, then you don't want to pay it.
Yeah, you always want to get a payment with removal, because just paying the account off, it's still going to stay it's going to show on your credit report. So you want to make sure that it's a credit with removal, and then even with the removal, it can take up to like 30 days to fall off your credit report.
Yeah,
good to know. I want to address Douglas's question about TRS because I'm sure we have some teachers out there watching as well. TRS, teacher retirement services or system, something along those lines. But it's the teacher's form of retirement. It's when you retire, you get a pension. And you get that for life. That's the beauty of a pension. Like with what's that, an annuity? You get it from the time you turn on for the rest of your life. I mean, I'm assuming. Yeah, Matt. I'm sure there's some things you want to add in there, Matt. But a pension, I mean, it's the teacher's retirement vehicle. And I don't think it's something that you can opt out of. My wife's a teacher, and
they take that money from you.
Exactly, but they also don't pay Social Security and or whatnot. They don't have Social Security tax taken out. So
if I'm not mistaken, it's just it's like a pension, huh? If I'm not mistaken.
Yeah, it's a pension. I mean, you work for the city of Dallas, so you don't have Social Security taken out of yours either. Instead, it goes to the pension.
Yeah, yeah. We. I mean, that's something we can't opt out of. That we have to pay into our pension. So that's not optional. Yeah. Let's jump into our last topic for the night before we close out. We were discussing managing stress when it comes to finances, especially during this time where we're in the pandemic. And let's Brother Winters, I'll let you start off with that one.
Okay, so again, I always tell you from my experience, right? So I can tell you that during this time of the pandemic, I've lost, fraternity brothers. I've lost a best friend. I've even had COVID, right? Dealing with that, dealing with being an entrepreneur and your business being stagnant up and down, because you have to depend on versus a steady W-2 paycheck. You have to depend on obviously commissions and fees, but just having all that come at you at once and dealing with kids on top of that can really be stressful. So it's important that we find those outlets or find those resources that are going to help us manage the stress, whether it's getting outside of the house and going for a walk or exercising and working out, finding somebody to talk to. Don't be ashamed to bring your problems to somebody. I mean, if you have a therapist, I think having a therapist is somebody that you will want to have in your life, because if you feel like you can't go to anybody else, you can talk to your therapist about what you got going on, and they can help you do different exercises or think a different way about the stress that you're managing and about the different, events that are plaguing you in your life, especially during this time. It's really tough, especially when you're dealing with loss. It's very tough.
Yeah, I think along with management stress, just what we were talking about earlier, as far as budgeting and saving, I think this time teaches us, to make sure that you are saving for that rainy day, because you never know exactly when it'll come and how to come. This pandemic hit a lot of people hard, so we want to make sure that we're pushing saving and being ready, trying to be prepared months in advance when things like this do occur.
That's a good point. I was saying that to Vince earlier, how there was an uptick in business since this pandemic started and going through it up until now. There was an uptick in business for me because more people are now focused on saving and saving for long term. And one of the things that I do is that I partner with people to introduce them to all the options available for them from a financial standpoint, and to take advantage of those options so that their future self will thank them. So it's really good.
Yeah, I think also the I guess the stigma that goes along with being perceived as being broke and not having money. We gotta get rid of that. I mean, now certain situations, if you made some very questionable choices and your money's gone, okay, that's one thing. But this is a pandemic. I mean, we're just trying to get through. Humility. We have to have humility in asking for assistance, and we also have to have humility in providing assistance. You don't have to let everybody know what you're doing, and stop making people feel bad for not having the resources or access to the same resources as you. Because my wife's a teacher. If she stays in teaching fourth grade and doesn't go into administration, there's a cap on where teacher pay is going to go. But they provide a service that, I mean, I can't teach anybody anything. And so, I mean, we have to get rid of this. I don't know the word. Stigma is the best thing I got for it. That you have to look a certain way, you have to dress a certain way. I know y'all seen that meme with Adam Sandler and that oversized T-shirt and off-color shorts and all that. But dude got money. Start making better decisions with our money, and let's stop shaming people for not having it or having access to it.
You're right. It's all about helping, right? And like you, Vince, myself, Matt, even Denard and Walter in their regard, we're all resources for everybody around us, right? And so I always offer myself out to help anybody. Whoever wants to take advantage of my time and what I have to offer can. I always say some will, so some won't, so what? But I'm always going to let somebody know that I'm here to help.
And that's good. Speaking of which, closing out, let's make sure that we're getting this information out to the people that joined with us tonight. Starting with you, Matt, just to kind of, again, for the people that tuned in late, let people know exactly what you do and how people can contact you.
Great. So again, Matthew Winters, financial advisor and planner. My company is called Winvest Services, LLC. I work with people in planning their financial future, not just the present, but all the way to the future. So from foundational planning through educational planning, investment planning, also retirement and estate planning. You can reach me. My email address is matthewwinters@financialguide.com. And then my phone number that you can reach me on is 214-514-8908.
All right, I'll go. Again, my name is Matt Leon. I am a corporate auditing credit review professional. I work for Bank of America. I can be reached. You can follow me on social media at Masterplan on Instagram, or you can also email me at mattleon06@gmail.com. Before I sound off, I did see a question come in about Black-owned banks. I don't want to target one bank, but I don't want to target one bank over the other. But if you are interested in supporting Black-owned banks, there is a website called thesimpledollar.com, and they have a list of about 18 to 20 Black-owned banks. You can go check them out. It also gives good resources on why you should support Black-owned banks and how you can support them. So there you go with Black-owned banks.
Matt, what was that website again?
Thesimpledollar.com.
Awesome. Thank you for that. And last but not least, again, Brother Butler.
Vincent Butler Jr. I'm CPA and owner of Butler and Gatz CPAs in Garland, Texas. We specialize in small to mid-sized business taxes, as well as entity creation. We help provide and source payroll solutions, some in-house, some may go out of our house, as well as business advisory services. We pride ourselves on having a vast network of individuals that we can refer to. So individuals like Mr. Matt, or both Matts, if you need anything in their wheelhouses. So entity creation, LLC, corporation, nonprofits, bookkeeping, tax services. Give us a call, Butler and Gatz CPAs. Our office number is 972-271-5696, which is the best way to get a hold of me. And my email address is blbutlerjr@garlandcpa.com. Love to hear from you.
Before I get off, let me just also cover myself. These are my thoughts and my opinions, and not the opinions of Bank of America. So I want to make sure I cover myself on that.
All right.
You gotta have that disclaimer for compliance, right?
Right.
Exactly.
All righty. Before we sign off, you guys know that we are going to talk a little bit every segment about what's coming up. So we're gonna tackle census. You can still complete your census. The last day is the end of this month. It is September 30th. You can still complete your census at 2020census.gov. Please make sure that you complete that. Encourage everybody around you that you know to complete that. And make sure that we are counted so those funds are properly allocated where they should be to help our communities. Along with that, you guys know that we have a big election coming up this year. It's the presidential election. We want to make sure that our voice is heard. A voteless people is a hopeless people. We want to make sure that we are doing our part. So the last day for voter registration is October 5th, 2020. That is October 5th. That is the last day that you can register to vote. So if you need to do anything, if you know you need to do anything coming up, we know that the DMVs were closed and they were only taking appointments. If you have an expired license or if you need a new ID, please make sure that you go ahead and do that ASAP, and make sure that if you moved counties, that you are registered to vote by October 5th. After October 5th, we got early voting coming up. That early voting dates are October 13th through October 30th. We know election day is on November 3rd, but we are not waiting on election day. We are encouraging all of our people to get out and early vote. Early vote, early vote. If you take advantage of early voting, usually there's not a line. There is going to be a lot of information on the ballot coming up for the presidential election, so you want to make sure that you early vote, so you don't have to wait in line. You don't have to deal with standing outside or waiting. So October 13th through 30th, and we always tell everybody take advantage of all the resources that you have available. A lot of employers will allow you time off. I know my employer, for instance, gives us 2 hours that we're able to actually get paid time off to go vote. So just check in with that and see if you have something like that through your employer, and make sure that you get out there and vote and your voice is heard. And election day is November 3rd. As we all know, that is going to be the final day to vote. But again, we are not waiting until November 3rd. We are pushing the initiative to vote early, October 13th through the 30th. All right, I'm going to shoot it over to Brother President for chapter information. What do we have? What does Road New Lambda have coming up?
All right, I guess it's time for me to give y'all some church announcements. So please pay attention if you can. We are the New London chapter. We're embarking up on our PNL Experience Week. So that's starting with our Charter Day, which we were founded and chartered in the Carrollton Farmers Branch, Louisville area on September the 14th, 2002. So we will be kicking off a week full of events that we want you guys, be inviting y'all to participate with us. Majority of them will be virtual. So Monday, that's our chapter Charter Day. So what we like for you to do is just tag your favorite Road New Lambda brother. If you have a picture or anything with us, let us know and just tag us on Instagram. Make sure you tag us at our Instagram page, PNL Alphas, and use the hashtag PNL Week. On Tuesday, that's going to be our Text to Give donation drive in conjunction with our nonprofit partner, the Onward and Upward Empowerment Foundation. As you may have known, we usually have our annual Ken Maintenance Gala every September around our Charter Day, but due to COVID, we thought it'd be very wise to just not have the event to further infect those in our areas. So we want to do a Text to Give. We're doing it's all virtual. It's all the easiest thing you could do is text PNL Week to the number 44321. Any amount is definitely appreciated, but we're asking if you can donate the amount of $20.02 in the year of our charter. On Wednesday, as Walter Herron said, we will be pushing our voters registration again. So we have partnered with Blend's Daiquiri Lounge to do a voters registration drive. We will also be going the same platform you see today. PNL Live will be live at Blend's Daiquiri Lounge. So if you if you have the opportunity to come out, please come out and join us. On Thursday, we'll be executing one of our national programs, Go to High School, Go to College. You see here, you can participate via our Zoom. We will be launching a Facebook Live. Friday, we want to close out the work week with some games. So we want you to come out, have some fun, let loose and unwind with some game night with us. Saturday, we're going to be brotherhood on the trail. So with mental health and physical health is important to us. So we'll be at the Arbor Hills Nature Preserve Trail on Saturday morning. And then Sunday, we want to give all our respects to the Lord and Savior Jesus Christ. So we will be having our brotherhood worship service in conjunction with Westside Baptist Church, seated in Louisville, Texas. So you'll see a lot from us over the next upcoming week. So we definitely want you to help us participate, help us celebrate our charter, and stay safe out there. So with that, I definitely want to say thank you to our 3 panelists that helped join us today, Brother Winters, Brother Butler Jr., Brother Matthew Leon. We thank you for your expertise. You answered some very, very good questions that I think some of our supporters were able to find some good information from. So I definitely want to thank you for joining with us today. But here you had another comment.
Yeah, as we found off, we just gave you a lot of information for PNL week. That will all be posted. You'll see us posting on all of our social media accounts. So that is in our Facebook page, which you are watching us live right now at Ronin Lambda Alphas, as well as our Instagram page, which is PNL Alpha. So just add us on Monday as we kick off Charter Day, and just stay tuned for all of that information coming out on our social media pages. And you can also, if you would like to get any information about the chapter, our website is roadlambda1906.org.
And yes, Kamisha we will send you the flyer. Any other closing comments, brothers?
Thank you for having us.
Without further ado, I want to thank everybody for joining us, and we are signing off. Have a good night.
We'll see y'all next week. Voters registration drive begins. PNL TV live.
All right.
See y'all later. Thank y'all.